Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's start with the trade setup. Asian markets at this point of time are trading rather muted, but the SGX Nifty is indicating a positive outlook of almost 27 points. So it's managed to stay on at this level for a while now. Now, as far as the ADRs are concerned, all the ADRs ended with losses on Friday. The big hit that came in were in the IT stocks. So counters like Infosys was down 3%. On the banking space, ICICI was down 2%. Wipro was down 4%, and Vedanta was down almost 3%. So weak cues coming in from the ADR segment. Crude trades muted after a 1.7% rally on Friday. Last week, OPEC had indicated that there are scope of further oil cuts that could be extended, and that is something that is keeping crude much higher this time around. As far as base metals are concerned, positive close for the base metals on LME, except for tin, most of them gained. So lead and zinc were up 3%, aluminium, copper and nickel were up anywhere between 1 to 1.6%. Tin was the only base metal to actually end with a negative bias on the LME. Now, as far as China is concerned, strong start for commodities in China. Iron ore is up almost 6.5%. Rubber is up almost 2.8%. Aluminium, copper, both of them are trading with a positive bias. As far as gold is concerned, gold trades with a negative bias in early morning trade. The other factors is the FII flow. So FIIs, DIIs, both of them were net buyers. FII bought in 306 crores. That's the NSE provisional number. DIIs bought in almost 176 crores in the cash market. This is the NSE actual number that came out. Now, as far as the trade setup is concerned, for the fourth day in a row, we saw negative closing by the Nifty. So significant, and for the second day in a row, it was more than a 100-point drop that came in. VIX surged almost 9%. All the sectors ended with a negative bias. What didn't do well, PSU banks, pharma, and real estate were pretty much the worst hit stocks on the markets overall. Nifty down almost 100 points. What contributed negatively? Reliance, Infosys, SBI, HDFC. So the heavyweights actually contributed negative for the Nifty itself. But looking at the FNOQs, what are we seeing? There were fresh short positions that were seen on the Nifty. Open interest build-up was almost 3%. Fresh short positions were seen. Even on the Bank Nifty, if you're looking at the Bank Nifty, it performed better than the Nifty, but still fresh short positions were taken. Open interest build-up was high at almost 9%. Now look at the PCR. The PCR for the Nifty has cracked significantly from 1.32 to 1.20 because call writers became much more aggressive. For the Bank Nifty, it seems to be rather stable, but still trading below the 1 level mark. Now, what's the position like? Call writers are most aggressive at 10,500, and put writers are much more aggressive at 10,000, indicating that this 500 point is the broad range that we're looking at the market at this point of time. Where were positions? Let's look at the open interest change that happened. You had the 10,200, 300 and 400 where call writers became much more aggressive. Put writers are much more aggressive at 10,000 and 10,100. So this seems to be the broad lens of sense of the market. But at 10,300, definitely resistance will come in for the market. That is what the FNOQs are indicating. Stock specific, India Bulls Housing Finance of fresh shorts, open interest build up of 4%, looks rather weak. The other counters that you have to watch out for, Z Entertainment, open interest build up of 7% on the short side. And finally, the last stock that you have to watch out will be Apollo Hospital, which saw short covering. Open interest was down 6% on the counter.
Stock of the day is Setco Automotive. Good set of numbers coming in from the company. If you're just supposed to run through the basic set of numbers, if you see the revenue, that's a 31% jump that we're looking at a number of around 135 odd crore. For that matter, if you see EBITDA for that matter, it's a good performance coming in at 54% jump at a number of around 19 odd crore. Margins for that matter, they have also expanded at a number of around 13.7% as compared to nearly 11.7% in the corresponding quarter. Now, if you look at the net profit, it's a 14-fold jump that we're looking at in the figure of nearly 14 odd crore as compared to 1 odd crore in the corresponding quarter. So what has led to a good set of numbers? A will be your business across segments have witnessed a sharp increase post your GST implementation. Higher sales along with your low expenses has led to good set of operating performance for the company. Employee benefits expenses as a percent to your net sales has come down to 8.6% as compared to 10.27% seen in the corresponding quarter. Other expenses have reduced down to 18% as compared to 22%. We're seeing now other income combined with your lower depreciation is what has led to a good set of bottom line performance. If you see other income, that has almost jumped up 4-folds to a number of around 7 odd crore, and this includes a number of 4.53 crore which is finance income and is a redemption of preference share investment for that matter. If you look at the segmental breakup, you would see sharp set of the increase which is coming in from the OEM market. If you look at the numbers, that's a 90.49% jump that we're looking at OEM. Aftermarket has registered a jump of close to 13%, while export division that has also seen a good jump of around 45% for that matter on year-on-year basis for this quarter. Good outlook for FY18 is also might just trigger the stock on the upside. If you see, the company is maintaining a 14% sales growth for FY18, which is going to be driven by a 10% growth in your OEM market and also 12% growth in OES and IM sales for that matter. Now this is also expected to, we are also looking at a 40% growth driven in exports for the complete financial year. We expect 15% increase in volumes for the financial year. We're expecting the EBITDA for that matter to improve 200 basis points in the second half of the financial year, and we are also looking at lower finance costs by around 6% due to reduction in interest cost, around 100 basis points. Now, improvement in cash flow and strong balance sheet is also on the anvil for the company in this financial year due to redemption of preference shares of around 34.65 crore during this quarter. With this, we'd like to toss it across to Jayesh for commodity and currency market updates.
Well, let me start off with the currency space, which was actually closed on Friday on account of a bank holiday. But if you look at Thursday's data, the rupee snapped its 3-day winning streak on Thursday and depreciated 0.2%. The 10-year too also closed above 7% for the 5th straight session. Also, both these counters will actually react to the GDP data that we got last week. Moving on to the commodity space, LME base metal index closed higher on Friday, which actually posted the first gain in all of last week. But on a weekly basis, it was a very bad week for the base metals, which saw the biggest fall since the month of September. So the LME base metal index, copper and nickel, all three of them declined on a weekly basis. LME copper inventory in fact came down 14% for last week, which was the most in about 12 years. But if you look at the Shanghai Futures Exchange, most of these base metals are trading with a positive bias. Zinc and steel are up more than 2%, while aluminium is the only base metal which is trading with a negative bias. Moving on to gold prices, we are seeing some bit of stability come about near the 1275 mark. Now on Friday we saw the gold prices actually jump to 1280, 1282 levels after the dollar and equities actually dropped on the Flynn report that we saw on Friday. As far as oil prices are concerned, we are seeing some bit of softness come about again for oil prices, but this is on the back of a big surge in Friday's session that we saw after OPEC promised to restrain the output curbs going into 2018. Goldman Sachs actually says that oil markets are too jittery when there is no reason to be so. So we'll have to wait and watch out for the entire commodities pack, especially the base metals.
Amongst the stocks that we're tracking this morning is Wipro, which is likely to face a $140 million lawsuit from National Grid US over ERP implementation. Do watch out for that name. But on a positive note, you have Dr. Reddy's, where the company has received an EIR from the US drug regulator for its CPS facility at Telangana. We're also tracking developments with respect to Tata Steel, where the company said it will acquire a 74% stake in Bhubaneswar Power from JL Power Ventures, and that will be for an outgo of 255 crores. That apart, we also have DLF, which has said that they will raise 11,250 crores via compulsory convertible debentures, warrants and the QIP route as well. Moving on, you have MT Educare, where according to a ET report, Z-Learn may pick up 42.78%. That's the controlling stake in the company. And they've also said that this transaction is likely to be completed by the fiscal end as well. So do keep an eye out for that name. We're also tracking GSW Energy, which has secured power purchase agreements aggregating to 208 megawatts. Now, with this, the company has said that the long-term PPA proportion of the company has risen from 64% to about 69%. We also could see a positive reaction coming in on transformers and rectifiers India. They've received an order worth 127 crores from Power Grid, so some positive reaction likely. Yet another stock which could see significant reaction is Merck Electronics, where the company will raise 144 crores via share allotment and warrants to the non-promoter group. Now, interestingly, these includes names like Ashish Kacholia, and this allotment will happen at 37.53 per share compared to Friday's closing price of 51.85. So we could see some negative reaction there, but those are some of the names you need to track today.
I think this is certainly a very positive development from multiple perspectives. First and foremost, Salil is a well-known figure in the IT industry. He was leading the application services at Capgemini. So he's well-known in the industry. The industry knows him well. And so he's well-rooted in, the ecosystem here. The second is he also has, by virtue of having been in Capgemini, multinational experience, global exposure and experience. So that's certainly another factor which would stand Infosys in good stead. And finally, I think this brings the curtains down on the various issues which arose, when Vishal Sikka left Infosys. And there were many questions about the change and, what would be the roadmap ahead. And I think Infosys needs to be complimented on having brought things to a swift close and having settled that issue and enabling him now to get on with the job.
Understands global trends, that he works for a fairly, a sizable multinational company, which also has a very large workforce in India. Obviously, culturally, he understands, India and the Indian business and the Indian, workforce. So we felt that was a very good, fit as well. So I think overall, I think he came through as a holistically very good candidate.
And what do you think? What are his core strengths that will complement Infosys in driving the growth? Now we are into a phase of transition to a digital approach as well. And
yeah, so I think Salil brings on board the kind of skills that we are looking for. He has been a turnaround manager in Capgemini. He has grown new businesses very well in Capgemini. He understands the digital space very well. He's considered to be a good people person. He is, a very soft-spoken, but at the same time very determined and firm person.
First point, it is good that they have got a person from outside who is fairly senior, would be based, sort of near client as well as knows the offshore location. So I think, from experience and profile perspective, surely a good fit. So that's my point number one. Point number two, I think, it's good that, it's not delayed further. So from timing perspective, they had said October end, for appointment. Slightly delay here and there, which is okay. So, good that they have come to conclusion and have got somebody who is fairly experienced, can handle this scale because, Capgemini is a fairly of a similar scale. So, very similar experience, very similar profile of business handling. So, good fit, prima facie.
Okay, auto sales fully out now. It came on the back of the low base of demonetization, but certain companies did well. So counters like Hero MotoCorp, Tata Motors, as well as Ashok Leyland reported strong set of numbers. Weak set of numbers coming in from Bajaj, M&M, TVS Motors and Eicher. Maruti was pretty much in line with what was anticipated. Now, in terms of let's individually look at them, Ashok Leyland came in, numbers were strong. Medium and heavy commercial vehicle gains was up almost to 54%. Light commercial was up almost 44%, so strong set of numbers. Bajaj auto sales was, motorcycle sales was up almost 11%, and CV sales was up 94%, but coming in below what the street was anticipating. Eicher Royal Enfield weak set of numbers. Models with engine capacity of up to 350cc was strong. That grew almost 26%, but the higher cc models fell in almost 12% for Eicher Motors. VECV, that is the Volvo Eicher commercial vehicle segment, that saw in a sales growth of 55%. Hero Moto, that sold in almost, it's actually the 7th month in a row that they've seen sales in excess of 6 lakh units. Maruti Suzuki met estimates. Passenger car vehicle was up 13%, led by compact cars like Baleno and Brezza. Ciaz was down 26%. Utility vehicles was up 34%. Domestic sales was up 15%, mainly on the back of strong sales in their compact car vehicle segment. M&M below estimates. Passenger sales vehicles was up 21%. CV was up 22%, but coming in below estimate. Even was the case with the tractor segment coming in below estimates, even though numbers seem strong. Tata Motors commercial vehicles was up 55%, and strong sales was seen both in the heavy commercial vehicle and light commercial vehicle. And finally, on TVS Motors below estimates, scooter sales was up almost 7%, and motorcycle was up 37%.
There is certainly one school of economic thought in India, which is export growth has been so anemic, especially the last 2 quarters of global growth has been very, very robust. And in this context, the argument, or this school of thought argues that small and medium enterprises account for half of India's exports. There are perhaps supply chains are broken, and we may have a deeper supply side issue here than we recognize. Do you subscribe to that?
See, I think there's been some confusion over the export numbers. I've been looking at them a little bit carefully, and if you look at manufacturing export growth in the last 3 months, it's been at about 9% in value, dollar value terms. When you do the smoothing and everything. Manufacturing exports, okay. It's a bit down from the early part of the year, but 9% growth is still substantially greater than what we were doing for much of 15 and 16. Now, so in that sense, I think it's picked up. I think the question, what is not clear to me, and we're looking at the numbers, is have our exports grown commensurate with the pickup, as you said, in world trade volumes and the pickup in growth in many of the other countries as well. It's not clear to me. We're looking at the analysis, but it's not that exports haven't picked up from the trough of the 15 and 16. 15 and 16 exports were really, I think, export growth was very weak. And now they have picked up. Part of it, of course, is world demand. But your question about have supply chains broken, I think the jury is going to be out, because unless we get a good sense of how the rest of the world is doing. Also, we're doing some analysis for the survey to see, in fact, whether exports have been affected by the twin experiments that we had or not. Both demonetization and GST. So we're going to look into that a bit more carefully. And so until we finish that, I still would like to reserve judgment on that.
Then what about imports? I mean, imports been very strong.
See, I think the supply chain broken story is for both exports and imports.
Correct. That's why I asked the
question. Exactly. So it was true that import growth was very rapid. But in the latest few months,
especially non-oil, non-gold.
Yeah, exactly. I'm talking only non-oil, non-gold. Exactly. So the argument was that there's been a negative supply shock, which has affected both manufacturing exports and domestic production competing with manufacturing imports as well. Again, we're looking at these things exactly as we speak, and reserve judgment. But on the import numbers too, the latest numbers show a marked deceleration relative to earlier. So let's see what is due to what.
Okay, Biocon will be in focus. The US FDA has approved the biosimilar version of Herceptin, which is extremely positive for the company. This is the first biosimilar to be approved for Herceptin by the US FDA. Apart from it, jointly, the drug was jointly developed by Mylan and Biocon. So basically, it's a big $2 billion market size for the company, and they've already settled with the innovator, that is Roche, and you know, the launch of this drug can be anticipated in 2019. The full year impact for the drug will be seen in FY21 onwards. Now, what are brokerages saying on this entire deal? First of all, Morgan Stanley has raised the target price of Biocon to 648 from the earlier 431. They're saying that this approval proves a way for clear pathway for commercialization of the drug, and they're saying that this approval has a positive read-through as far as their Bangalore facility is concerned. CLSA has maintained a sell but raised the target price to 350 from the earlier 210. They are saying this approval validates Biocon's capability in the development and manufacturing of biosimilar, but valuations is still expensive and fully priced in the entire value of pipeline at the current market price.
On the brokerages, first we have is Jefferies on cement. Now they are saying that the cement sector is facing two headwinds for the near term. First is the petcoke ban, second is the sand mining ban. Now the petcoke ban is expected to impact the EBITDA of cement companies in the range of 2 to 11%, while the sand mining ban will impact the demand in at least 5 states according to Jefferies. On the back of these two reasons, the brokerage is expecting demand to remain subdued in the near term, even after accounting for the low base of demonetization quarter. Now when it comes to Dalmia Bharat, they have downgraded the stock to hold from buy and have cut the target price to 2957 from 3038 due to slowdown in volume growth, lower core profitability and lack of near-term triggers. And when it comes to other cement companies like ACC, Ambuja, Shree Cement and Ultratech, they have maintained their rating but have raised their target price. Second we have is Edelweiss on DLF. They have maintained their buy rating on the stock and have hiked the target price to 237 from 185. Now balance sheet recovery is will provide a significant operational flexibility to DLF according to Edelweiss. This fundraising will bring down the company's net debt to equity to 0.4 times from 1.1 times. Now DLF has plans to focus on the high-end residential segment in the NCR region and will continue to complete its ongoing residential project in this region and be prepared with the ready-to-move-in inventory to be sold once there is a recovery in the demand. Now they're expecting gradual uptick in DLF's operation in the coming quarters. Lastly, DLF is a key beneficiary of consolidation, steady rental portfolio and improvement in balance sheets are the positive when it comes to DLF.
Well, on to some stocks to watch based on the delivery data. First up, we have Biocon, which was up 3.5% on Friday, saw delivery buying in excess of 60 crores. The delivery volume was up 66% at nearly 13.5 lakh shares versus the 10-day average, and the total volume too surged nearly 60% at about 70 odd lakh shares versus the 10-day average. The second stock to watch out for would be DHFL, which was down 2.5% on Friday, saw delivery selling in excess of 150 crores. The delivery volume was up 140% at nearly 25 lakh shares as compared to its 5-day average, and the total volume more than doubled at about 71.5 lakh shares versus the 5-day average. Petronet LNG, this would be the interesting one to watch out for. It was down 3% and saw delivery value of about 90 odd crores. The delivery volume was however down 70% at 36 lakh shares versus the 5-day average, and the total volume too was down about 60% at about 54 lakh shares versus the 5-day average. Well, with that, it's a wrap on All You Need to Know. Indian Open up next.